Today is April 21, 11:34 a.m. and we are following up on our JD video we made back on April 12th. So it's this date, and let's see, it was around $37.50 about here when we had made that video, and we put on a trade, and it was a ratio trade. And if you remember on that trade, this was the trade. On that tab, you'll see these are the numbers at that time. If you haven't seen that video, we'll put that link right above here. You can also click it if you have info cards showing up. So these were the numbers, the analysis. It was a ratio 2-to-5. And you'll see now, since JD did not rally towards this range here, and it's actually went down slightly from 37 to 35. It's trading at 35 now. We are still profitable at about $99. Once it expires, by the end of the day, you'll see it's $100. Yeah, so there it is, $100. So even though it didn't rally, because we sold those call spreads, you'll see here for the May 19, these call spreads are what's giving us that actual overall profit, because we did a special trade where if it doesn't go up, but if it goes down, we would still make money here at $100 per for every one of these ratio spreads we did. So this was a very more interesting trade we did based on these unusual options. And so even though it didn't go the way we thought, it went the other way, but that's okay, because we wanted to also profit from this, because if it went down, it's also hitting our profits here, about here. It's just the same as if it had come up to here and we took profits on either of these, right? So it was a situation where maybe it may rally, and so that's why we bought these calls that expire today. Since it didn't, they are now expiring worthless, but because it went down, these are now going to be cheaper, so we can buy it back for profits. So I guess 109, right, was what we got in credit. So if we want to buy it back now, so let's unlock this for the market value, 37. So that means that 109, we can take off 37 because we need to pay 37 to buy it back, right? And so we're actually getting $72 of profit here, plus the amount, because we had these options expire, right? So that's how these call spreads work, is you have to buy it back once when you want to close them off. Okay, so yeah, that's our trade. Our positions are still here. You'll see here, this one is expiring worthless on the April 21s, and the May 19s. This is the call spread that we did on the 40 strike calls and the 45 strike calls. And so there they are. You'll see here there's some volume, some positions being removed and closed. You'll see here that's kind of you can kind of see that here, that this volume here is less than the open interest. And so we've been closing some of these positions now and taking profits, because the our April 21s are expiring today. So so that's something we wanted to follow up on the JD trade, where it was a quite of an interesting trade. And hope you learned something from this trade. And if you did, please please comment below what you think, and subscribe if you haven't. Hit the bell icon and you'll be notified whenever we see these unusual options. Just like on April 12th, when we saw the JD unusual options, We told everybody about it, put it out the video, and if you have the bell icon notified on, you would be informed right away to be able to decide for yourself if you want to put on a trade. All right. We'll put that video, that April 12 video, at the end of this video as well. If you haven't seen it, please do so. It helps you learn more on how to use unusual options for your trading strategies. All right. Take care, everybody, and good luck.